Greece's day in the eurozone and possibly the European Union could be numbered as the debt crisis has taken yet another turn for the worse. With its international creditors closing the door to a bailout extension, the Greek Prime Minister has confirmed that banks will be shut on Monday and capital controls imposed. Our Han Daeun tells us more.
Greece's nightmare is fast becoming reality after its creditors, the European Commission, the European Central Bank, and the International Monetary Fund, rejected the troubled nation's request for an extension of its bailout program. As multiple sets of debt repayment due dates draw ever closer and with no money by which to pay them, Greeks have been rushing to ATMs to withdraw their savings, fearing the worst after Parliament's surprise referendum call on the creditors' take-it-or-leave-it bailout terms. Greek Prime Minister Alexis Tsipras has announced that banks will be shut on Monday while capital controls will be imposed. The country's stock exchange will also be closed on Monday.
This decision led the European Central Bank today to limit the liquidity of Greek banks and force the Central Bank of Greece to suggest a bank holiday and a restriction on bank withdrawals.
With the announcement, Greeks will have a cash withdrawal limit of about $66 per day, while payments and transfers abroad will be prohibited. Banks will reportedly close at least until July 6th, a day after the referendum. Greece is facing a $1.7 billion repayment to the IMF that's due Tuesday and a nearly $3.9 billion repayment to the ECB on July 20th. Greece's woes have raised the possibility of a so-called Grexit from the euro, sparking declines in Asian stocks. In Korea, the benchmark Kospi dropped 30 points to close down at 2060 on Monday, while the Kosdaq tumbled 2%. The country's finance ministry has raised the Greece surveillance level up one notch and formed a task force focused exclusively on the Greece fallout. But officials also said that Seoul has been preparing for the worst-case scenario, so the impact will likely be smaller than it might have been 4 years ago when fears of a Grexit were raised for the first time. Han Daeun, Arirang News.